Today on PutbrotherNews. President Trump recently made headlines with his comments regarding ongoing trade talks with China, asserting that he is actively engaged in discussions with President Xi Jinping. This assertion underscores the administration's commitment to addressing trade issues that have long, strained relations between the two economic powerhouses. The economic impact of tariffs and trade negotiations between the United States and China is multifaceted, presenting both potential benefits and drawbacks for each nation. High tariffs, while intended to protect domestic industries, can lead to increased costs for consumers and businesses. For American consumers, tariffs on imported goods often result in higher prices, as companies pass on the additional costs. This can reduce disposable income and limit consumer spending, ultimately affecting economic growth. On the business side, American companies that rely on Chinese imports for raw materials or components may face increased production costs, which can hinder competitiveness in both domestic and international markets. Conversely, high tariffs can provide short-term protection for certain industries, potentially leading to job preservation in those sectors. However, this protectionism can also provoke retaliatory measures from China, further complicating trade relations and impacting exports. Looking ahead, Moore predicts that the outcomes of these trade negotiations could significantly influence the stock market. He suggests that a resolution to trade disputes could lead to increased investor confidence, potentially driving stock prices higher. Conversely, prolonged uncertainty surrounding trade policies may create volatility in the markets as investors react to the evolving landscape of U.S.-China relations. Moreover, Moore highlights the critical importance of resolving trade issues for sustained economic growth. He argues that a stable and fair trade environment is essential for fostering business investment and consumer spending. By addressing trade imbalances and creating a more predictable trading framework, the U.S. can enhance its economic prospects and promote long-term growth. We encourage you to engage with this content by subscribing to our channel for more insights on these important topics. If you found this video informative, please give it a thumbs up and share it with friends and family who may also benefit from this information. Your support helps us continue to provide valuable content and fosters a community of informed viewers.